Back again, boys. Today we have a trade I took yesterday, and so yesterday was no news, and yeah, I took it in London session as always, and so let's take a look at it. I'm just gonna keep pumping out these videos every trade I take, because it's really helping me a lot with just going over all of these trades once again and getting a grasp of them again. And sometimes I film and I realize what went wrong while I'm filming, so that really helps. And yeah, so this was a trade I took. No news conditions, so I assumed nominal normal market movement. So if we if I take my trade correctly, if I set it up correctly with a high confluence rate, then my trade should hit. So first of all, as we always do, we have to take a look at the daily bias. So the daily bias, well, actually, let's start off at the daily. Daily bias was actually bullish yesterday, but you do see that we actually get an overall retracement for yesterday on the daily time frame. On the 4 hour, you see that yesterday we had a pretty significant break of structure to the downside. So that's also confirmed by the 2 hour, seeing a pretty, dominant break of structure to the downside. So safe to assume that's how our daily bias was bearish. Well, you could say that on the daily we were bullish, but the daily's such a high time frame, and I don't take intraday trades, so I don't really care about the daily. Well, I do care about it, just yeah, you know what I mean. And yeah, well, what was interesting yesterday was we actually had, while I was trading, we had this pretty big break of structure to the upside on the 30-minute, and that's also seen on the 15-minute. So yeah, but that didn't change my daily bias. That only made me consider that, maybe we're retracing on the 2 hour and the 4 hour. So what I did was I marked out high confluence areas where price was likely to draw to. So I can see if we do get a reaction from there, I can enter a short from there, because remember that the daily bias was bearish, so we're looking to enter shorts. So on the 2 hour, we see two sizable imbalances, which are right here, right here. So those are the two big FVGs that I was aware of. So I marked them out, and also I checked for other confluences, being that, is this an odd block? No. This was an FVG that was filled, an imbalance that was filled. So these were the two, high confluence areas that I did come up with. And so we scale back down to the 5-minute. This is what I was working with here. So I was watching the charts. Price came in and touched the 1 hour. What am I saying? I meant touched the first imbalance, and there was no reaction whatsoever from the first imbalance being filled. You can see it here on the 3-minute as well, that there was actually no reaction. This wasn't a break of structure. So now I'm thinking it has to be reaching for this second imbalance, this second FVG. So in fact, we did continue that uptrend and we did fill that fair value gap. And at this point, I'm just waiting for a break of structure. And also, I forgot that, we can't enter a trade without a liquidity sweep. So you're probably thinking, where is the liquidity sweep? Well, it's right here. This was what made this a really, really high confidence area that price was likely to draw to, because one, there was a liquidity sweep, and two, there was a fair value gap that was waiting to be filled. So price by going up and filling that fair value gap, it kills two birds with one stone. And as you see here, we created a low, and at the end of the day, we did get a break of structure. So I'm looking at the risk to reward, and the RR ratio wasn't bad, so I did enter from here. So I set my stop loss right above the liquidity sweep, to account for spread and all that. And to also not make the same mistake I did a few trades ago where I set the stop loss too tight right on the end of the liquidity sweep, and by doing so I sacrificed a winning trade. So I won't be doing that again. So this time, you know, three or 4 points above the spread. No, I mean the liquidity sweep, because the spread's 2 pips. So I set it at around 3 to 4 points above it, to give it some breathing space. And yeah, so I was looking at the RR, wasn't bad. And yeah, I was hoping for at least a 1-to-1 RR. So I targeted this low right here. And by doing so, I did get a 1-to-1 RR. Yeah. If I wanted a better RR, in hindsight, there wasn't really many choices to be taken, to be had. I mean, there was this imbalance, but you know, that was also filled, and it was a minimal risk to reward improvement. And I saw this high confidence trade, so didn't want to wait for anything else, just wanted to take advantage of the high probability. Yeah. And oops, price did push down a lot, even broke this low. So yeah, maybe, just maybe, if the daily bias had been bearish, I maybe would have gone for an even better RR. May have even targeted, you know, this low or this low, and that's a what? That's a really big R. That's a what? That's a 2.63. That's a big RR. But knowing me, I probably wouldn't have targeted this though, because but maybe I would have if the daily bias was in fact bearish. But overall, I'm really really happy with this trade. I followed my trading plan, of course, risk 1% as always, and just a really high confidence trade in general. and my setups have improved. I utilized, before this, I would have seen the 2 hour and the 1 hour disagree with the 4 hour. No, I mean, the 1 hour and the 30-minute disagree with the 4 hour and the 2 hour. And I would have been, maybe this isn't a good day to trade, but today, yesterday, I mean, I recognized that, you know, it was a retracement and it was targeting these two fair value gaps, which it was, and it followed the daily bias and capitulated. So I'm happy with that. Really happy. And yeah, better risk reward than last trade as well. I'm gonna aim for a 1-to-1 from now on as well. Yeah. So that's it. Really, really happy. Gonna be trading again today in a few hours when New York opens. The bridge between London and New York. That's when I'm gonna be trading. And yeah, keep in mind this is not financial advice by any means. This is just me going over my trades, my own personal trades, to find out what I did wrong and right, and to improve from that. And also for me to come back and watch these and look through and hear and actually experience my thinking process in real time. So yeah, any advice regarding trading is greatly appreciated. And yeah, that's been me. Thank you very much.